Well, there has been plenty of commentary about a market bubble and a potential pullback before the end of the year. But my next guest says he's got a, quote, optimistic vibe of the market, particularly with technology stocks. This sounds like something that Scott Martin would say. He joins me now from Kingsview Wealth Management. Scott, good to see you. What do you mean vibe? What's up with the vibe?
Vibes. The panic, Cheryl, I think is gone for at least the near term. As you and Jack talked about, we're seeing that deleveraging possibly end with Bitcoin that's spilling over to the NASDAQ today and into the Dow. So, listen, I believe that a lot of these weak hands, Cheryl, are out of the markets. I think they're gone. I think they've been blown out. Now, it's both in tech and Bitcoin and some of the other fringe assets. So that's a good stepping stone for the market to kind of come back and normalize as we go into the Fed meeting next Wednesday.
Yeah, well, again, I'm glad to hear it about, in particular with technology, but you're expecting a big bounce back, and that does include the tech sector. But are the fears surrounding tech valuations overblown, or is it more of a thing where you're going to see some winners and losers, and that's kind of been the overall analysis of the group, especially when it comes to AI?
Great point. I mean, look at Google over the last several weeks, Cheryl, not even feeling this rush downward, but then places like Oracle, which is a pick of ours today, just because it's been so smoked over the last 3 weeks, it's just insane how much the valuations come off of there. So if you look at some of the stocks, Cheryl, that have held in, I wouldn't say I would chase those as an individual investor. We're not chasing them as portfolio managers, but believe me, you, looking at Meta, looking at Amazon, with some of the recent news they had with the chips against Nvidia, and of course, Oracle today, those are stocks that have come down considerably in valuation, and frankly, haven't had their fundamentals change that much, other than, say, the emotional part of the investing club here has taken those names down as they've sold out.
Yeah, no, and certainly, booking some profits before the end of the year makes sense for many. Oracle shares are on the rise. Wells Fargo did initiate coverage with an overweight. Same time, there's questions about debt. They're carrying $105 billion in debt, but you've still got to buy on this one.
Yes, debt makes the world go around, Cheryl. I mean, just look at our own U.S. government to figure that one out. And the fact, too, that, Cheryl, the debt is structured at Oracle pretty well. I mean, they've had a lot of kind of comments about their debt and the CDSs and things like that, and credit default swaps if you're playing at home, and talking about how they're going to default on this debt and things like that. Oracle's got a great business outside of AI. They've got great lending structures going on at the company, and they have to borrow to basically invest in the future, as a lot of these companies are. So as they get more investment from other places, they have to invest themselves. They're doing it by raising assets, or raising debt, rather, and they're putting those assets to work. Yeah,
there's Oracle, 206 and change a share. I do want to ask you about Nvidia. The CEO, Jensen Huang, he's on Capitol Hill. He is meeting with lawmakers to answer just general questions about AI. But Senator Elizabeth Warren is criticizing the fact that it's a closed-door meeting. She says that Huang should be, quote, brought in to testify publicly over chip sales to China. He spoke to Grady Trimble of Fox Business. He said the U.S. should get first dibs on the chips before they send them to China. If you don't mind, run us through why you're buying Nvidia here. And what about, this controversy with him on the Hill today?
Well, yeah, I mean, look, a lot of people, I think, want to keep Elizabeth Warren out of those meetings, so I don't blame the companies for that. But I will tell you, look, NVIDIA's case still is the leader. They're still the lead dog. They're still the lead horse, Cheryl. There's a lot of competition out there. There's a lot of companies that are going after NVIDIA and the chips and the sales, whether it's China, U.S., wherever. The point is, NVIDIA is the leader here. They're the dominator. The chips that they keep releasing on these updates through earnings are unbelievably powerful. They're unbelievably going to be cost-effective, too, because they can produce enough of them, hopefully, to meet that demand. And so it's so funny to me as we look at the, say, general marketplace here. Today, we're worried about AI demand. 2 days ago, we're worried about too much demand for chips. So you see how fast this goes through kind of a cycle? Jensen Huang, the CEO of Nvidia, has been ahead of this game for the whole time, and I think he stays ahead. And Nvidia, too, another name, Cheryl, that's pulled back and not felt the love that some of these other areas in AI have. That's why I think you should get into it right here.
Yeah, no, that 5-year chart looks amazing. What about NET? What about SMCI?
Yes, Cloudflare and Supermicro Computer. Some of the fringe players, if you will, on cloud and storage and things like that, servers, but still names, Cheryl, that have been absolutely smoked in the last, say, couple weeks, 3 weeks, aside from the fact that there's been a little bit deterioration on, say, some of the net income interest, net income margins, some of the interest payments that they're making on some of their debt. Leverage companies, yes, but a lot of good prospects going forward in the space. And AI's here, whether you like it or not. It's going to get bigger. It's going to get better. That's where a couple of these companies take advantage.
We're going to be talking during the show about some other plays that you can make with AI right now. Scott, it's great to see you. Thank you for being here.
Good to see you, Cheryl. Bye.
All right.